Discipline is choosing between what you want now and what you want most. Abraham Lincoln. My friends, 10 to 15 minutes each and every day. Can't you find that time in your schedule? If you can, stick with us each and every day. If you cannot, and you can only find time once a week or 2 or 3 times a week, you're wasting your time. Go on to some other place that claims to have some magic secrets they're going to teach you, which invariably don't work. This is about doing the work and working the plan. And if you will just spend 10 to 15 minutes each and every day practicing this, do not worry about how long it takes, because when you master the markets, you'll make up for all the time you ever spent. And let me tell you, the storm that is on the way, you need to be prepared for. If you've been watching your money tick up, or you're just now starting to save money and you want it to go somewhere in the future, when the storm hits, my friends, and it is going to hit, and when it does, you're going to see crazy like you've never seen. And wouldn't it be nice to know how to chart the markets, how to protect yourself and your future? In fact, how to thrive when the market's crashing. That's what we teach. Practice with us each and every day. Let's jump into these charts. Stocks are down. Bitcoin is down. Bonds and gold are up. Let's look at where we are with the SPY. Now, we saw where things popped up big on the 2-day chart for Friday. And of course, as we look at the half-day chart, we can see where things went up Friday and Monday and then started rolling back over, down hard on Wednesday morning, and then a lot of variability Wednesday afternoon, but again, ended up down for the day with lots of volume. And of course, what do we have on the 2-day chart reflecting Tuesday and Wednesday? Lots of volume and a doji. What do we see on the weekly chart? We're getting up close to, we got 2 more days to get up to average or higher volume. And what do we see here on the doji, on the weekly chart? A doji or a spinning top, one of those. And again, looks like things after a bit of a pop-up are starting to revert back to the mean, but we'll wait, we'll watch, we'll see how it goes. But I have a feeling, I just have a feeling. Again, feelings don't count. It's what the charts are telling us. Now, and some of you have been asking, hey, jumped into this move on the initial rotation over. That's all well and good. And of course, been sticking it out, hit your, your sell point, and maybe dropped half of that in your inverse trade. That is one-time ATR on the 2-day chart, and took your profit, left the rest of it in there to run. Now, if you see things starting to heat up again, going down, then of course you can load back up again. You can just keep writing out what it is you have. Again, those are the kind of things that you practice and see what you are comfortable with and what you can learn from doing that. But negative for the day on the S&P, down 0.32%. The NASDAQ down even more, 0.72%. And again, same kind of 2-day candle, punching up for Friday and Monday, and then rolling back over with a doji, staying below that weekly trend line the entire time. That's on the 2-day chart. Half-day chart sinking back below that weekly trend line. Weekly chart, we've got that doji spinning top, whichever you want to call it, very close to a doji, sitting right there on the weekly trend line. Now, a real doji is sort of what you see on the weekly candle for the 1st of April, starting that week. That is one of those that is pretty much black. It's really hard to see anything, and it is just 2 lines, a cross. Otherwise, it's more like a little spinning top. But again, it means indecision. And when you have that teamed up with lots of volume, it can help you see things starting to move in one direction or another. Doesn't mean it always happens. We saw things, again, where we had the market moving up the week of the 4th of March with decent volume, peaking out and then dropping over the next week, but it wasn't sustained. It moved right back up again. But again, you see what it did is it had enough fuel to burn itself a little higher, never got the volume. And then what happens? When you don't have volume, you collapse. And of course, it did, and heated up strong on the 15th and the 22nd. So that's the week starting then in April. So again, just watch, see the interplay between how volume and price work together to tell you what's really going on in the psychology of the investors of the market. Okay, now let's look at where we are with bonds. Bonds up a little bit for the day, 0.40%. We look at this 2-day chart. We can see where bonds have been tracking down for quite a while. Where are we? We've got the second doji right there on the weekly trend line on the 2-day chart. We did have a dividend declared in the morning on Wednesday and made its way up a little bit in the afternoon. You can see the volume there in the afternoon. But again, where are we going to go? All things being equal, the market tends to move in the direction of the largest chart, which is, of course, the weekly. So we're still short, but we are paying attention. We've not hit the lows of last week yet. And we do have these dojis showing us indecision. Is that indecision just digesting the losses, ready to move down more? Or is that indecision getting ready to move up? We just can't fully tell. So again, we'll wait, we'll watch, we'll see. We have 2 more days until a Friday potential decision time comes. Let's move on to gold, up 0.91%. Now we have a red spinning top for the week. We have a series of red down candles on the 2-day chart having pierced strongly that weekly trend line. And of course, we can see where that first happened back on Monday the 22nd, where gold just jammed down hard. And then following up that morning on Monday the 22nd, that afternoon, and then sliding sideways and up a little bit starting this week, and then hammering down on Tuesday, popping up a little bit on Wednesday afternoon in particular, with some volume. We'll just see. I mean, again, we got a red down candle with decent volume on the 2-day chart, and we're almost up to average volume with this spinning top, a red spinning top. So I feel like the downward pressure is still on there. We'll see how gold continues to move along, and if indeed we might want to consider a short position in gold. Now remember, there is no good inverse fund in gold. DGZ is the single inverse in gold, but it is very illiquid. That means the difference between the bid and the ask is very high, and you have a lot of ground to make up if you enter a trade just to break even. We don't like that. So we look to buy puts in our practice trades to short gold. If you want to know how to trade options, you want to learn, of course, join it in the 3 levels as a Patreon member. First thing we send you, first email you get the minute you sign up and become a Patreon sponsor is our 3-part series, Options Made Simple, The Charting Wealth Way. It is a great training in options. And you can use that training to practice trade puts in gold. So anyway, think about it. Thank you so much, Patreon members, for your support. Lastly, we will go over to HODL, down for the day. Bitcoin 3.65% on the Bitcoin ETF that we track. That is HODL, HODL. That is the Van Eck Managed Bitcoin Trust. And again, Bitcoin pulling back very, very nicely. We have been wanting to see this since Bitcoin peaked, blew off all that steam, and I kept talking about it. When you see something blow off this much steam, it is very hard for it, after doing that, again, to take back off again, and you see how Bitcoin has not done that. Tried to get a little steam up, and we had that week after, beginning the 25th of March, could not get anywhere near the high, and then a spinning top the next week, spinning top the next week in green, and then since then, red down candles. We're hoping Bitcoin will go down for a while, and then it will settle out. Then we'll see a nice rotation over, going up, a good clean crossover. And of course, by then we should be able to see because of this new chart, once we hit 20 candles, we'll start getting our average volume. That's the black line that we have on the chart there with the volume measurement at the bottom of each of the time frames. That will be extremely helpful. So we're just continuing to watch Bitcoin track down. When that tracking down ends, we will be ready to jump back in and practice trade another up move. Who knows how long that will take? We don't know. But we'll be standing by, looking at it every day, getting ready for it. By the way, Patreon members, we already have uploaded at the Patreon page the 3-wave trades for the week, the charting cryptos, commodities, and currencies. We'll release the current charting cryptos, commodities, and currencies to everybody on Friday. And of course, don't forget tomorrow night, your weekly vertical crossovers. We strive to find 20 of those for our Patreon members each and every week. On the S&P 500 gives you even more to look at, to learn from, and to practice trade. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.